talk some dollar stores, and to help us with that, I want to welcome in TD Ameritrade Network contributor Jenny Horn. Good morning to you, Jenny. This is a space that, in times of uncertainty, can sometimes be a safe haven of sorts, as it is offering cheaper priced goods. But I can't imagine a place that would struggle with inflation more than places that have, basically price caps. And I know not both these companies are the same. One of them is more of a discount kind of grocery store, but all things considered, discount stores feel the inflation pressures maybe more so than some of their premium peers.
Absolutely, and I think that's why you see both the stocks sort of cooling from the year that was, because they both sort of benefited from, being deemed essential businesses. They weren't forced to close, and they really operate, like you mentioned, in a time where they thrive during recessionary periods. So both stocks, for that reason, saw pretty strong growth over the last year, and really they saw this affect their top line growth. They've been really gaining from their robust comps and also improved gross margins, and both stores have actually sort of restructured themselves to be more grocery centric, and they've offered more fresh food initiatives as well as more contactless ways of shopping, which of course was a huge hit over the last year. But now Dollar General is sort of what we call the fake dollar store, because things are more than $1 at Dollar General. Dollar Tree and Family Dollar are the true dollar stores. But both companies, actually, one of the biggest issues I saw across the board ahead of their first quarter reports, which will be tomorrow pre-market, is actually the fact that they had to employ more people, and they had to pay these people more money and had to sort of incur more employee costs, and that's actually expected to weigh on their margins potentially in the first quarter. But actually, earlier this week, Bank of America downgraded Dollar General specifically, and he gave a lot of really interesting factors behind his downgrade in his report, which I thought could affect both retailers alike. He said that he downgraded the stock basically based on higher gas prices, convenience store traffic actually recovering, which is expected to add pressure to Dollar General, the return of grocery store promos, online grocery penetration, which is expected to really only benefit these mass players, so not Dollar Tree, not Dollar General, the return of RX growth, and he said that both of these retailers are actually positioned for wage pressures, and their valuation implies room for downside swings, which we've seen with retailers through earnings, the last 2 or 3 weeks. So I thought this was interesting because it does apply to, I think, Dollar General and Dollar Tree, since they both sort of operate in the same sort of target demographic. Now, Dollar Tree has actually significantly underperformed Dollar General over the last 5 years, and the biggest challenge continues to be its acquisition of Family Dollar. Now, they have done some things to sort of try to compete. Now, they offer alcohol, they've tried rebranding some of their Family Dollars to Dollar Trees, but they still can't seem to sort of catch up with Dollar General. And I think that has to do largely in part to, like what you mentioned, Dollar General is not the true dollar store. But both stores, what I always think is super interesting when we talk about them, is how massive they are. So if you look at U.S. retailers, they come in at numbers 3 and 4 in terms of the mass scale of stores they have, just behind Subway and Yum Brands. So really, they are the true retailers that are some of the largest. I mean, Dollar General operates over 17,000 stores, and they employ more than 160,000 employees, which was up 11% from last year. And what is actually the most fascinating about Dollar General is they boast that 75% of Americans live within 5 miles of a Dollar General, which I fact-checked because I was like, no way, there's none in the city of Chicago, at least by me. And there's one within 2 miles of me. So I was proven pleasantly wrong. And that brings me to our first tweet of the day, which just really talks about the scale of these stores, which says, Dollar General, which already has more than 17,000 U.S. stores, says today that it sees an opportunity to build another 17,000 in the future. Remarkable. So, I mean, this is crazy. And that scale of growth, they're saying they could potentially double their amount of stores, would just be astronomical. But actually, Dollar General has these plans to grow, as well as Dollar Tree, which says they plan to add 600 stores just in fiscal year 2021 alone. So I think both of these stores expanding is a very, very healthy sign for them in terms of their growth, in terms of their balance sheets. And our next tweet sort of talks about why these stocks, or Dollar General specifically, is favorable, and says, I spent time researching the consumer defensive sector last night. I looked at all of the big names, their valuation, and debt/equity, along with price targets. My pick in the sector is Dollar General. There's one in nearly every town in America, and they're growing. So again, I really, really like the fact that both of these names are growing despite some of these sort of inflationary pressures, like Alex mentioned. I think that, the sign that they're continuing to expand, and I mean, they have 17 and 15,000 stores. I think that's a pretty good sign, especially, looking at the charts. These stocks really weren't as greatly impacted by the pandemic, which shows a degree of resiliency that I really like, Kevin.
Yeah, Jenny, your stats about Dollar General, Dollar Tree are amazing. And, I consider myself to have good awareness around me. And, the suburbs are full of these things, Jenny. They're everywhere. And how about this stat that I read this morning? In 2021, of 3,597 retail chains that have announced store openings, right? 3,597 stores, 45% of them have the word dollar in that name, which means Dollar General, Dollar Tree, and Family Dollar. 45%, almost half of all the new stores opening, and they're everywhere. And so, when we talk about scale, it's often McDonald's and Starbucks. Well, add these to the list and keep them there, because it is amazing how many states that these are in. Dollar General I have in 46 states, Dollar Tree in 48 states. The answer to the trivia question, Hawaii and Alaska, is where they're not. They're everywhere. And so they're only getting bigger. And the fact that you think, or someone reported that they may grow double, that is just absurd. However, if you look around your community, they are everywhere, Jenny.
Yeah, it's just incredible. And you think about kind of the rural exposure they have as well, maybe a little bit more resilient throughout the pandemic in terms of closures and reopening. So we'll see. I'm excited for these reports, and we'll see what they have to say and how the market interprets that. Jenny, great setup as always, and thanks for joining us. As we say goodbye to Jenny, I want to welcome in the co-founder of LikeFolio.com, Landon Swan. And Landon, I'll kick it to you. I think Kevin and Jenny did a really great job of kind of laying out the landscape as we head into this earnings release for these two companies. Now it's to see, I guess, how excited are consumers about these two companies?
Sure. Yeah, I think it's my role now to take the other side of this. You guys had a pretty bullish slant there. It's impressive, the number of stores that they've got, the reach that they have. But when it comes to just consumer happiness, purchase intent, all the stuff that LikeFolio tracks, it's not very impressive. We're actually a little bit concerned with these two companies. And one of the things that we like to look at is, normally it's year-over-year purchase intent, but actually nowadays we're doing year over 2019 purchase intent, because 2020 was just so crazy. Comps were wild. I mean, Dollar General had a fantastic response with people stocking up because of COVID. And so the numbers are pretty wacky for 2020. So if you go back to 2019 and compare, you can see that Dollar Tree and Dollar General on this chart, they're on the left side, which means that they've actually seen a little bit of a decrease in purchase intent. We're also putting on this chart Five Below, because I know it's not exactly in the same ballpark, but they are a discount retailer, and it's nice to throw them in to compare. You can see how far to the right they are. That's in the positive territory. Also, the up and down axis is happiness. You can see that Five Below's got a much higher level of happiness at 72%, whereas Dollar Tree at 63 and Dollar General at 60 are lagging behind. It's important when you're talking about these two companies to say what else could they be doing better, and I think Five Below is sort of showing that off. When we look at Dollar General and Dollar Tree, one of the things that LikeFolio has keyed in on over the last few months is what we call the urban exodus. A lot of people have been leaving cities, going to more rural areas, and that is where obviously these companies thrive. And you would think that if you're getting an influx into the areas where these stores are, the stores should be doing a lot better. But actually what we're finding is that people carry their preferences with them. And so someone who's used to going to Target or Whole Foods or something like that, when they move to the rural area, they're not just automatically saying, well, I guess I'm going to Dollar General now. No, they're actually looking for, okay, where is the Target? Oh, it's a little bit further than Dollar General. Fine. Where's Whole Foods? That kind of mentality. And so they're not benefiting. And a lot of it has to do with just, I think, the appeal, the curbside appeal, and the happiness. Like I mentioned, the happiness levels are pretty low. For Dollar General, they get a lot of complaints on the stores being disorganized and poorly run and unclean. So while they do have a massive, massive footprint, more stores than Walmart and McDonald's combined, which is mind-boggling, and maybe they're going to double, like you guys mentioned. That's insane. But they do have that large footprint, but I don't think that they're benefiting from people moving into those areas. I think they need to do a better job of execution at the store level to get people happier, get them coming back. So a little bit concerned. Plus, you've got the inflationary pressure. Anytime you've got a price in your name, this applies to Five Below as well. You're going to hate inflation. Of course, they've already moved to things that are above $5. And Dollar General and Dollar Tree, they may have to budge a little bit on $1 items. So a little bit concerned moving forward. On an earnings score, we're pretty bearish on both of these names. I know that Five Below doesn't report this week. They report next week. I think it's next Thursday. But Dollar General and Dollar Tree are this week. And again, pretty bearish on both of them for all the reasons that I stated.
Wow, this is a tricky topic to navigate, because although, and by the way, I just have to say that the new sentiment data that LikeFolio brings to this show that is really easily, it's easy to understand what the positive and the negative is. You want top right, you don't want bottom left. So this is really easy to navigate this data. So here's my thing though. What does Dollar Tree, Dollar General, do they have a Walmart problem, like an identity crisis that people don't want to say they go in there or be seen in there? Because what is the problem with a company owning so many stores and growing so much and seems like doing so well, yet it doesn't seem to ever show up in the numbers, Landon? What's going on here? How could this company be so big yet so unhealthy?
Right, I agree. I think we need a better term. We need to come up with something. I know exactly what you mean when you say a Walmart problem. It's that perception, and I think it applies very much to Dollar General and also to Family Dollar, a division of Dollar Tree. Dollar Tree is not as much impacted, so they're a little bit better off. But just as far as the stores being clean and, I don't know, the people that go there being presentable, that kind of thing. I don't know how to describe the Walmart problem, but I know exactly what you're saying. It's just a perception that it's lower quality. Anytime you go somewhere where the lights are dimmer, the place is unorganized, and maybe the floor is dirty, it just doesn't feel like a place that you want to buy groceries,
right?
And things like that. So I completely agree. I don't shop at these, so I'm a little bit biased, obviously. But again, we're going completely on the data. And if you look at that change, 2-year change year over year, it's bad for Dollar Tree and Dollar General, while it's actually pretty good for Five Below.
It seems to me that we're looking for a word like stigma. There's something that we have to overcome to go to something like this. And I think the thing that we maybe need to overcome is this has to be the only choice. And in many rural communities, maybe it is the only choice. And so while there is this urban exodus, Landon, it's to more suburban areas like Kevin's describing. So maybe this is a potential choice, but you still have Target, you still have Walmart, you maybe even have a Whole Foods that a lot of those urban consumers are used to frequenting, and they look for those first, to your point. So, Landon, you kind of stole my question here with your statement, so I'll just kind of throw it back. One final point. It's clearly a kind of a bearish tilt, at least for the near term, but is the long term, if inflation continues, and I know you're more looking at the data, that these companies are going to maybe have to budge, maybe become the $5 tree, as Five Below seems to be outperforming. And they have that kind of a business model that allows some of these quality of the items to increase by a factor of 5 times versus just a traditional dollar store. Right.
So I'd say short term, definitely bearish on Dollar General and Dollar Tree. Longer term, I don't like the inflation pressure. I also will say that as people do move to these areas, if they feel like they're underserved, competition will roll in. I mean, they've got a lot of smart competitors. They're going to follow their customer and open up more stores. So it's not just about saturation and ability to get one within, 1 or 2 miles or whatever the stat was. It's about getting people the stores that they want. And I think that you're going to see companies like Whole Foods and similar moving out more into the rural areas as those areas are growing and as urban exodus is happening. So Long term, I'm not a buyer of Dollar General or Dollar Tree. I do like Five Below. I think they're executing in this space, unlike the other two. They have that discovery element where you walk in, it's fun. They've got a much higher consumer happiness rating from 60 or 63 up to 72. That's monster difference in the same category. And there is no stigma. There's no Walmart stigma like we talked about. So of the three, Five Below, and that's why we're including them. I didn't want to just come on and be completely bearish. We wanted to show you that there is a winner, in our opinion, LikeFolio's opinion, of this sector. And I think it's Five Below, and I would shy away from Dollar General and Dollar Tree.
Great stuff. I think that's an important point, that this isn't necessarily a downtrodden segment, just that there's a different winner in this space. So Landon, thanks for joining us. We really appreciate it. And we look forward to talking to you again soon. The co-founder of LikeFolio.com, Landon Swan.